In this presentation, we'll talk briefly about the income statement. The intended outcomes. By the end of this presentation, you will learn and gain the skills that are required to transfer this messy data into organized and valuable report that measures and reports the profit generated by a company during a certain period. This report is called the income statement. The income statement is very valuable and important to guide the decision of various people who have stakes in an organization, including the owners, whether to invest more in the company or to sell all or part of their investment. Managers, where the performance of the company needs to be improved. Investors, whether to invest in the company or no. Lenders, whether to lend money to the company or no. And if yes, how much. Government, whether to take tax from an organization or no. And if yes, how much. Suppliers, whether to supply an organization on a credit basis or no. Employees, whether to continue working for a company, and if so, whether to demand higher rewards for doing so. Then, as you can see, the income statement is very important. It provides valuable information to people in order to guide their decision about an organization or about the company. The income statement purpose and layout. So far, we explained the income statement as a statement that measures and reports how much profit an organization has generated over a period. Then the ultimate outcome of the income statement is the profit generated by an organization during a certain period. The layout of the income statement. As you can see, the income statement starts with its title. The income statement for the year ended the 31st of April and the year, for example, 2020. And the income statement includes many elements or terms towards calculating the profit for the year. And in this presentation, we'll talk in details about these elements or terms. We'll start with the income statement title. The title of the income statement typically will show that the income statement for the year ended the 31st of April and the year 2020, for example. And here we are not talking about the normal year, which started on the 1st of January and ends on the 31st of December. We are talking about the financial year. And in the UK, the financial year starts on the 1st of April 2019 and ends on the 31st of April 2020. Then, at the end of the financial period, companies prepare their financial statements, including the income statement. Now, it becomes more clearer. Going back to the title of the income statement. Here, the income statement for the year ended the 31st of April 2020. It means that all the figures include the income statement are associated with this time period from the 1st of April till the 31st of April 2020. Then, the profit shown in the income statement is generated during this period. It's not generated before this period, or it's not generated before or after this period. It's generated during this particular period, which included in the title of the income statement. Sales revenue, the first term included in the income statement. What is the sales revenue? By definition, the sales revenue represents the financial value of sales made during the period. We are talking about the value of sales. Going back to our financial year, and imagine that during this period, we sold 500 units for 20 per unit. Our question here is that, what is the sales revenue for the period? Here we are talking about the sales revenue for the period. We are talking about the sales value of the 500 units that we sold during the period. Then the sales revenue for the period will be the 500 units multiplied by the selling price of £20 per unit will give you £10,000. Then the sales revenue that was generated by an organization or by the company during this period is £10,000. The cost of sales. As you can read here, the cost of sales represents the cost of buying or making the goods that are sold during the period. Then we are talking about the cost that the company incurred in order to acquire, obtain, buy the units that the company sold during the period. Going back to our financial year and imagine that during this period we bought 700 units for £6 per unit. Of these 700 units, we sold just 500 units. Then the question here is that what is the cost of sales for the period? Shall we multiply the purchase price by the 700 units which we bought during the period, or multiply them by the 500 units that we sold during the period? In fact, we need to multiply by the 500 units that we sold during the period. Why? Because here we need to calculate the cost of sales, the cost of the units that we sold during the period, rather than the cost of the units that we bought during the period. Then the answer will be 500 units multiplied by 6 will give you 3,000, which represent the cost of sales. Now we'll go to the gross profit. What is the gross profit? It's the profit from buying and selling goods and can be calculated by using this formula. Gross profit will be sales revenue less the cost of sales. Then £10,000, which represents the sales revenue we calculated so far, and the cost of sales 3,000 we calculated previously. Then the gross profit in this case will be 10,000 less 3,000 give you 7,000, which represent the gross profit. It's the difference between the sales revenue and the cost of sales. Go into the operating expenses. In fact, the company will not incur just the cost of sales in order to generate the revenue for the period. Instead, the company will incur another cost which is necessary for running the business for the company and therefore generating the revenue for the period or for the certain period. These costs are called operating expenses and would include the rent of the building, for example, heat, light, and power we use in order to run the business to, for example, run the machines and produce the products, the insurance, salaries and wages, and motor vehicle running expenses. Then we need to consider, in addition to the cost of sales, we need to consider these expenses in order to calculate the profit for the year. Operating profit. What is the operating profit? Operating profit can be calculated, or the profit that is generated by the revenue after deducting the cost of sales and the operating expenses. It can be calculated by using this formula. Operating profit equals the gross profit less the operating expenses. Gross profit, because the gross profit represents the profit after deducting the cost of sales from the revenue. And in addition to this, we'll deduct further the operating expense in order to calculate the operating profit. Then the operating profit in our example will be 7,000. This 5,000 will give you £2,000 as operating profit. Taxation and the profit for the year. By definition, you know that the taxation is the amount paid to the government that is based on the net profit of the company. Then, based on the profit generated by the company during the certain period, the government or the company needs to pay part of this profit to the government as a taxation. A profit for the year can be calculated by taking the profit before taxation or the operating profit and deducting the taxation will give you the profit for the year. And this profit will represent the amount or the profit that is available for the owners of the business. Then they can withdraw this amount of a profit. It can be calculated. We have the operating profit 2,000 less the taxation 500 will give you the profit for the year 1,500. In this case, you learn now how to transfer this messy data into organized and valuable report representing the income statement. Here we are. This is the final report, or the final report of the income statement. We have the sales revenue less the cost of sales 7,000, give you the gross profit. Operating expenses, we have a rent 1,500, insurance 500, health, heat and light 500, salaries and wages 2,000. Motor vehicle expenses will be 500, will give you a total of operating expenses 5,000. Then 7,000, which represent the operating or gross profit, less the total of the operating expense will give you the operating profit, less the taxation will give you the profit for the year. And this then.